got to tell you, I was really surprised. It only had modest chart success at the time. I mean, give me a break. Only number 3 on the Soul Singles, 14 on the Hot 100, but it's become a legendary anti-love song. In some ways, it could actually be the theme song for mega cap and mag 7 names in 2026. I mean, think about it. Just we learned last night, like, you know, these filings from hedge funds and these large corporations, that a lot of them are just sort of doing a lot of selling. For instance, NVIDIA sold all of its APLD, all of its ARM. Western Digital sold all of its SanDisk. And when you see something like this, my first thought last night was, maybe it's an indictment, maybe it could be read as an indictment on everything, right? I mean, after all, they know these companies better than anyone else, and they ended up selling them. So as it turns out, the session is doing pretty well. Those companies that were the sellers are actually up a whole lot. And so that's one thing we're looking at. I want to bring up now also, we're so stuck right there. I'm going to have to go to my notes and do this. So the Mag 7 names are holding here, and they're not running, but they're holding. Right above the 200-day moving average, which is absolutely great. It's spinning its wheels, oversold on RSI. And the thing is, maybe it's going to make a stand here. My next guest, though, says that when it comes to Mag 7, the historical cash cow, it's gone. I want to bring in Robinhood Markets, their CIO, Stephanie Guild. And Stephanie, the thrill is gone, essentially, for the Mag 7 for right now. But for how long? I mean, is it gone?
I think it's gone as a group. Like that, my kind of whole thing has been, don't avoid them, but really look at them as individual companies because they're each doing their own thing in this environment with higher interest rates, CapEx incentives, huge CapEx spending. I think it's really just, it's changing the game, and old assumptions need to be reviewed again to say, like, which of these companies are going to do well from here and which ones maybe are going to go through a period of consolidation. Well,
last year, though, you got to get props because you did ask and warn folks, say, listen, you know what, okay, concentration's too much. It wasn't an indictment on the Mag 7 per se, but you did talk about broadening out portfolios.
Yeah, and I said, again, look at them individually, and that's actually what happened. I think they were barely up over the time period from the time I said that. And I believe it even more so because I think the whole environment is providing an incentive to really look at like a couple of different things.
All right, let's talk about looking at different things. Last week on Robinhood, users, it looked like, according to the names that were net buys, are going shopping, so to speak. These names are on sale. AppLovin got hammered. It was wild because one short seller apologized. It still didn't matter. Amazon, Microsoft. So, I mean, it feels like the investors out there smell opportunity here.
Yeah, they definitely are. And this is pretty consistent with the patterns that we see often, where they buy the things that are down a lot and sell some things that have been working. So on the sell side, they've actually been selling NVIDIA, which is up around 4 or 5% over the last month, where a lot of these are down double digits.
Now, you talk about this being a stock pickers market, and because it is a stock pickers market, the focus should be on the 3 R's.
Yes.
Okay, let's talk about the 3 R's. The receivers. Talk to us about the receivers. Hardware, defensive tech, equipment makers, robotics. What does this mean?
To me, it's the receivers of all that CapEx. It's like, what, $700 billion estimated? Even where is it going? It's going to this kind of stuff, and this is where I think, like, why not invest in the things that are going to benefit from that amount of spending? So robotics, for example, like we had a company called Cognix that we really liked and had a huge boom a week or two ago. And I think defense tech is not going to end. We're going to have continued kind of, escalations throughout the world. And the equipment makers, the things that benefit from the build out of data centers and other things.
And honestly, this seems like a slam dunk because we know the cash is coming. It's going to be allocated. And you can argue how long or how durable it is, but for right now, it seems phenomenal.
I think you want to make sure that you're just thinking about expectations and how much is already baked into the prices and just being careful about that.
Okay, so let's talk about resources, the other R, another one of the R's.
Yeah, resources is like energy, the hard things, rare earth metals, like the things that you need to make all of this stuff work. And if our economy is booming because of, changes in regulations and things like that, all of this stuff is going to be more needed. And natural gas, for example.
Would you caution, for instance, on rare earth, there's some names out there that are doing extremely well.
Yeah.
But in reality, it's going to take years to get permits, to dig. In other words, the hype level is here. the reality might be a ways off, and the stock, they may go up and down the same way.
It's going to be volatile for sure.
Yeah,
Nothing is going to be for the faint of heart, I think, at all this year. Like, volatility is going to be higher, and all this stuff, I think, will end up higher, but you have to be able to stick with it and take your winnings when you can.
Yeah, well, it looks like you've trained them well, right? They took NVIDIA and they're buying all this other stuff on weakness. Recoveries, this is intriguing. This kind of gets to, select retailers, select software. How do folks go about zeroing in on those areas?
I think there's nothing better than like hardship to kind of reinforce how your operation should be. And then you start making decisions that you say like, okay, we're going to cut this, we're going to do this better. And I think retailers has been one place that has happened over the last couple of years. You think about the tariffs, like that was kind of ground zero for what happened there. So there's a couple of names like VF Corp. They sold one of their businesses. They've been paying down debt. Gap has been doing the same thing.
Right.
So even if the consumer slows down, I still think there's like interesting kind of micro stories. Software is the same, but obviously it's been hit by a more macro story of AI.
Right.
So you want to be careful there and make sure you're invested in something that I think can't necessarily be wholly replaced by AI. Maybe a regulatory-oriented name.
And the bottom line, though, is you're still sounds cautiously optimistic about the economy and the stock market.
Yeah, I am. I don't see any reason to sort of not be yet. I think the one area I get worried about is higher interest rates potentially, and that making an impact because of our deficit just not really going away.
Well, we got Daniel Booth on deck, so we'll find out about